Well, the latest 5-year plan adopted by the Chinese government will see the contribution of the services sector to GDP increase to just under 50%. This is expected to grow to 60% by 2030 as part of a broader strategy to change the way in which economic growth is achieved. Rico Frederick joins us from Cape Town to provide us with more insights into China's changing ways. Firstly, Rico, let's just get an indication about whether you are worried about China or not.
I think there's been a lot said about the concerns, particularly around the slowdown in GDP growth in China. And I think part of this is maybe by design. And certainly the government seems to be fairly relaxed with a slower rate of growth now than what has been in the past. And I think one must also bear in mind that a big contributing factor to the growth rate that China has experienced over the last 10 years has come from fixed asset investment. And that is going to grow at a much slower rate going forward than what has been the case in the past, with bigger contributors coming from other sectors of the economy, as you highlighted in particular, the services sector. So we're certainly not overly concerned about the slowdown in growth rate. I think the mix in growth is quite encouraging. But what it does mean, however, is that the demand for commodities and resources is going to grow at a much slower rate than what we've seen in the past.
Rico, thanks very much for that excellent newsletter that you wrote, and obviously if you make that available to the public, I'd strongly encourage everyone to go and read it. But just in terms of this 5-year plan, I just wanted to understand that within the context of China, this new plan that aims to change the way in which the economy develops going forward. Is the 5-year plan almost like a mini national development plan?
Yes, it's nothing new for China. It's something that they've been doing for almost the last 60 years now. This is, in fact, the 12th 5-year plan that they're embarking on. And maybe not dissimilar at all from some of the economic development plans that South Africa has put in place, certainly since the start of democracy. I think, however, they have been maybe a lot more effective in terms of the implementation of these plans, and part of that is due to the way in which decisions are made there, obviously a lot more centralized than what is the case here. But those plans have made a massive contribution to the growth that China's experienced over the last several decades.
Rico, the 5-year plan, obviously, it's the way I understand it is because of the large component of state-owned companies or enterprises in China. They can roll these plans out from the government. But you made a few interesting points in your article. The first of which you talked about the long-term growth you expect to be in the medium term at about 5%. But you talked about China being a business, and one of the things that was fascinating was the amount of graduates coming through the system there. As a proportion of 1,000, as a ratio of to 1,000 people, it's double at 22 what we are producing in South Africa. What's your sense of the general state of the education system in China, and how do you think that's going to add to that growth going forwards?
I think that's probably been one of the areas that South Africa has not excelled in at all, and that's on the education front. And what it enables a country like China to do, obviously, is evolve from an economy that was hugely dependent in the past on agriculture, for example, to an economy going forward that will create jobs rather in the services sector through innovation. And you can only really do this if you have a very strong educated workforce. South Africa has a challenge, as we've seen over the last 12 months, with a shrinking mining sector and a fairly unskilled workforce. So it's very difficult to take these unskilled laborers and deploy them in other areas of the economy effectively. And that's something that takes time, and you really have to plan many years in advance to get the benefits that China, for example, is currently seeing out of their 7.5 plus or minus million graduates coming out of their education system every year. So, you know, again, South Africa does spend a big proportion of our GDP on education, but it's just not coming through in terms of creating the skills necessary for companies to meet companies' requirements.
Rico, we got obviously a very interesting point that you made is around the governance issues in China and the ability to do business. What was your sort of sense traveling around? Because you highlighted in your article as well that famous investors have gone to China and not quite cracked it because they don't understand the intricacies and the subtleties of the governance issues in China. So, I mean, if you had to think about starting a business there, what would be the biggest risks that you'd sort of consider when thinking about the governance in China?
Look, I'm by no means a seasoned expert on China or someone that has traveled there extensively over the years. So I went there, being my first visit, with the expectation that there'd be enormous a number of opportunities for us to invest in and generally for businesses to participate in the growth. But I think what I certainly underestimated is the fact that there have been companies there for a long period of time building up their business franchises. So the competition is absolutely intense, much more so than would be the case in South Africa, for example. So you've got businesses, multinational businesses that have set themselves up many years ago, trying to find a foothold and trying to get some piece of the action. But it is very, very difficult. It's difficult not only because of the language and the cultural barriers, but the way in which business is done there is somewhat different to what we would normally expect. So from an investor's point of view, and certainly from our point of view, there's an enormous amount of uncertainty. And I think one of the biggest concerns especially is around corporate governance. For us, that would mean that when we're looking at opportunities in China, firstly, we would stay away or probably prefer or favor global businesses that have established themselves in the Western world with corporate governance principles that we understand. And secondly, we would probably apply a much greater margin of safety when looking at businesses and opportunities to invest in there.
Rico, one of the things you pointed out as one of the risks, and this was quite interesting, was you talk about something called the total social funding and how that is a ratio of debt to earnings now stands over 200%. Just take us through that definition, total social funding, and what the implications are, because from my reading of it, it seems that parts of the Chinese economy are very highly indebted.
Yeah, from what I understand, the term total social funding was devised, at least by the People's Bank of China, to explain what was happening with respect to the growth in debt in the Chinese financial system. So historically, obviously, it was just the banks that could lend money to businesses and to individuals. And the Chinese government had control over that lending. And what has subsequently transpired, especially since the start of the financial crisis, is that because of the restrictions on lending, a lot of other lending institutions popped up, and they are now a very, very big part of the amount of lending that is taking place in China. So, for example, lending by institutions that are not banks grew roughly by about 120% this year. And this is an area that no one has a lot of information around. The government in China is not able to control through its traditional measures of loan-to-deposit ratios and the maximum amount that banks are allowed to pay on deposits that they receive. And so this has been a big concern, and hence the downgrade, for example, in the credit rating that took place in China earlier this year. And the biggest concerns probably are in areas of the economy where there's a substantial oversupply. So those industries that benefited from this massive stimulus that took place after the financial crisis are the ones that I think we have to be very cautious on. And they are, your traditional old smokestack businesses like shipbuilding, packaging, the steel industry in particular, the cement industry. And I would certainly be very cautious in looking at these companies when investing in China right now.
Rico, you made the point that the official non-performing loan ratio for the banks is 1%, and you kind of indicated that with all this shadow banking taking place, that I guess investors and analysts are not getting a clear picture of the debt problem. Just from your on-the-ground sort of assessment, do you think there are major credit bubbles, or I don't like using the word bubble, but major credit problems developing in some of these areas?
Yes, the short answer is definitely there would be pockets where I would be quite concerned, and some of those industries I highlighted earlier. But the key question is, is this a systemic problem? In other words, if there was to be a potential bad debt write-off in one of those industries that I highlighted, what would the knock-on effect be for the rest of the financial sector? And undoubtedly, I think given the fairly narrow margins that the banks earn on the loans that they make, there would undoubtedly be some knock-on effects that could potentially drag the financial system down as a whole. We saw some of that coming through with the liquidity squeeze that was experienced about a month ago. But again, and this is the absolutely amazing thing about the way in which the Chinese government runs the country, is that they have the uncanny ability to make and take decisions fairly quickly, as opposed to, for example, if you look at Europe, where we're still 5-6 years down the line and kicking the can down the road and trying to figure out how to solve these problems. I think the Chinese government is much better equipped to be able to deal with any potential problem much quicker, much more effectively than, for example, Europe has.